Morning, friends. Is my PPT visible to you? Is my PPT visible?
Yeah, it should be seen.
Okay, good morning and welcome to this session on report writing. So, you already have had 3 days earlier in the training sessions. This I'm taking this session. This will be about 1.5 hour session this morning. As the title itself says, report writing for registered valuers. It's a very important topic, and report writing is as important a skill and art as the valuation itself is. Uh, this document is a very important document in the sense that the entire effort, the exercise culminates into this document and you present to the client. The document is made after you have done the site surveys, you have done your research, you have gone through all documents, you have seen, you compared your own subject asset with the other assets in the market, the costing, the research, the analysis, and everything you have done, and then you put down all your experiences, your conclusions in this report, and you present it to your client. This is a very important document, as I earlier said, and also a very confidential one because it must not be given to any other person other than the client. So, by client, I mean the person or the entity who engages you as a registered valuer to the valuation for specified assets. I hope you are aware of the process, and some of you would already be doing valuation in some other regulations. So the process starts with the requirement from the client. So you get to know the requirement, you propose your scope, what you will do, how you will do, and what you will charge in terms of your fees, and when you will submit your report. And this all depending on what the scope of the work is. So initially the client tells you about his requirement and also the scope, what he expects from this entire exercise. Not the numbers, the final conclusion, but the process, the methodology required, and the objective of the exercise. He explains and defines to you, and then you and the other prospective valuers in the case, they submit the proposal. The client goes through that, and he selects the most technically qualified people, and as per his criteria, of course, and then he discusses the further details. If he thinks that there is some change to be done in the scope after he has received the proposals, and he discusses the fees also. So that negotiation, that discussion ends, and finally there is a number, there is an agreement reached, and that agreement is presented to you in the form of an appointment letter. Once you get the appointment letter, then you proceed with the information which you seek from the client. He provides you with the information, the documents, and then you proceed with the site visits, analysis, research, and all those activities. So all those actions done, completed within the time frame which has been defined in the appointment letter, or if there is an extension, you seek that extension and the client provides that extension. Finally is the time to make the report. Now the report, as I said, is the final document. So your entire effort, your entire skill, your capabilities would be presented through this report, what you have done and how you have done and I mean, diligently you have done this process as per the scope or the expectations of the client. This report is also an important parameter in terms of building up a market for you in future, because in professional activities like this, so there is a word of mouth which flows from client to client. So if the client is happy, is impressed with your work, he will give you a repeat work, or he will refer you to other people in his fraternity. So this report, uh, the presentation part of the report, the contents of the report, and whether the report has complied with the regulations, the requirement. So all that is important. So today we will discuss how to write an important document like this report, and what should be the content. Now these contents have been, since we are discussing about registered values, course, the syllabus with IBBI as the regulator. So we will restrict ourselves to that part, wherein we discuss the content or the regulations or the rules which have been framed by IBBI for registered values and the requirements there. So you would have gone through the syllabus, both land and building and plant and machinery valuation course. It's quite similar.
Excuse me, sir. Can you
Yeah, please.
excuse me, sir? Can PPT be made be in full screen?
Pardon?
So
Sir,
please make
PPT can be made
Oh,
in
I just. Is this better now?
yeah, better.
Okay, great. So you would have seen the syllabus part. The syllabus for both land and building and plant and machinery is quite similar as far as the report content is there. So the first three parts which the report syllabus, this report writing syllabus talks about the quality, structure, and style. So basic definitions, I'm sure being an engineer, you would all be knowing these aspects, but let's revise or rehearse these aspects, how important, what is the definition of these. So quality, I have taken quality definitions from few sources. Quality is the standard of something as measured against other things of a similar kind. It is a degree of excellence of something. So when I talk about quality, so or when a client looks at the quality, he looks at the quality of work with a reference to some other thing, maybe his past experiences or current experiences in similar scenarios. He would have seen other reports. So he will see the quality of report of yours vis-a-vis the other reports that you would have seen. Quality is also the right thing to do the right thing right. I mean, whatever is defined in the regulations. So for us, registered valuers, the regulations and the act are the most important thing. So these take the topmost priority among anything. So even if the brief from the client is something which does not comply with the regulations or the act, we have to point it out to the client that this is not as per the act, and the correct aspect is this, and we will prepare our report or conclusion accordingly, like this. So that's about doing the right thing right. So and it being a document which will remain for a very long time, and the validity of the report, for example, in IBBI regulations or the Companies Act, the validity of these reports is very long. For IBBI, when we talk about the insolvency cases, the duration could be as long as 8 years. So we have to be very sure that the document is made as per the act, as per the regulations, as per the requirement which has been specified for the listed values, in addition to what has been specified by the client. I mean, top priority is about the regulations and the act only. Another definition of quality is a product or process that is reliable and that performs its intended function is said to be a quality product. So when I talk about reliability, reliability is something wherein you get an expected outcome. So not again in terms of the numbers, the value, but the process that you follow. So reliability, when I say the objective includes following the international valuation standard, then the report should have followed the international valuation standards. Okay, or some other standard which has been identified and which has again been, allowed or specified by the acts and the regulation. So that's the quality part of the report. So our report should be a document wherein the client should not find a chance or an opportunity to point out about the quality aspect of it. So it's not about the content part only. The presentation part also is extremely important. For example, the paper you use, or the printing, the kind of printing that you use. So a document like evaluation report is as good as a story document. So when a person reads it, he should be able to identify the location of the information that is looking for right from the index. And when he goes to that specific page or that specific section, he should get that information. So our endeavor should be to make it as ideal as possible. Maybe it's not always scope for improvement is there, but every time we should strive to make it the best possible document that we could make. Then comes the structure. Structure is about how you present things sequentially or in a logical manner, logical sense. So some definitions for structure: the arrangement of and relations between the parts of elements of something complex. Now this report is an important complex document. Complex in the sense that it has very different and very exhaustive kind of information which is presented to the client. So how fluently the client is able to read through those information, and how can he arrive at a decision by going through that information, is another unique feature of a good valuation report, which comes through the structure. So structure is like you have the cover page initially, then you have an index, you have an introduction, you have a preamble, you have information about the company, the subject asset, and the processes which are involved. So you give a brief also about the processes, and then you give disclosures, disclaimers. You talk about certain actions or activities which you could not undergo because of certain restrictions in your working. So all that information you try to be very transparent and present to the client the best possible information you could gather, and then a conclusion through that information. Conclusion for the client to make, and an estimate that you will be making about the valuation numbers. Okay. Another definition of structure is an object constructed from several parts. So structure is a wholesome thing. The report is a wholesome structure, and you have different sections talking about different aspects of the entire exercise, about the asset, about the market, or about the current economic scenario. So all these things taken together and then bound together, presented together, makes the structure. So that's a structured valuation report. Another definition about structure is constructing or arranging according to a plan, give a pattern to. So you have a plan in your mind, you have seen the appointment letter, you know what the scope of work is, and you have undergone the field visits, you have seen the asset, analyzed all aspects about the asset, the market, the economy, and everything you have done, and then you present it. So you construct a structure, you construct a report, a valuation report, and that plan is there in your mind. So you place one section after the another, just to make it very fluent, again to make it very easy for the client to search for information or to look for information at the pointed out page or the section number, so that he can make an informed decision. So that's about the structure part. Coming to the style part, now the style is would differ from valuer to valuer. So each one of you would have your own when you start doing valuation, you would have a set pattern of presenting things to your clients. Uh, uh, you would be having a structure, a predefined structure. Maybe you could use as a template for all your reports. But as I said, each report is a unique document, so that structure could also change from one report to another. But basically, it's the unique template which you have made as per your style, as per your individuality, or as per your you being a professional individual. So again, a few definitions about style: the particular of doing or saying something, how you present it, and then way of arranging delivery. So again, the kind of report. So don't underestimate aspects like how you bind that report, or what kind of paper you are using in the report, or what kind of printing you are doing when you are making a report. So all these are very important aspects. So content is the most important part, no doubt, but all these parts about structuring, about the quality and the style part, also add additional, features to your report. It makes it more appealing as compared to your other competitors in the market. So when we talk about competitors, there would be many people. Among ourselves also, we have different ways. So some would think economically, or let's say save some costs in making the report or presenting it to the client. And some would think, let's do an investment kind of a thing, so that this document, the client does not have to put much effort in securing this document. This is properly bound in a nice way, can last 8 years or 3 years of life, and the papers are good. The printing ink is good, so that it can last for such a long time. It will not, dry away or fly away. So all these are important points, and I think this is my personal belief, and I'm sure while I'm presenting this to you, I am very confident that you would agree with me that such things makes an impact. So when you look at reports made by some individual valuers, or reports made by organizations, large organizations, so you would see the difference. And that is the difference I am talking about here, which should come in the individual presentation also. So when we aspire to become a strong valuer or a reputed name in the industry, we should be doing similar kind of work as the other reputed people are doing, or we should make our presentation similar to what the other reputed concerns in the market are doing. Then only we can expect us for our name to be counted along with those people. So quality, structure, style is an extremely important part, which should always keep in our minds when we make report, when we think of making a report. Okay. So next part is about the purposes of valuation. So you would have seen, let me show you the, so this is the syllabus part, which shows for plant and machinery. And from where I have uh, taken these parameters which I am explaining to you. So these are derived from these things only. For example, for plant and machinery, when I talk about the syllabus, so this is the syllabus which is given that these points are to be covered. So instructions including basis of valuation received from the clients. This is the appointment letter showing scope of work. So these are the contents of the report, the evaluation report, which are to be included. So these are the mandatory contents. Apart from this, you can also include your own content to make the report more fluent and more user friendly. So these are the basic content, but which are defined and which must be there. These are the mandatory contents of the report. Coming back to our presentation here. So there are certain things, I'm not sure whether you have learned about in your earlier sessions about the basis of valuation, the premises of valuation, all those things. But I will explain to you some important aspects in which are there while you consider writing a valuation report. Now, the terms and purpose of an assignment, when you take an assignment, the client would explain to you what is the objective of this uh, assignment, or why does the client want you to do valuation exercise. So it could be for the banks who want to lend money to corporate debtors. It could be for taxation purposes. It could be for insurance purposes, or many other things. Okay. So this is the objective, and the appointment letter would have the terms mentioned there, terms of references, how what the valuer is supposed to do, what is the scope of work, which all assets he has to consider in his report, and if there is any specific condition existing at the asset side, that also the client would explain to the valuer. This is which the valuer has to think over and decide on the basis of valuation. What is the base of valuation which is to be taken for this specific scenario, for this specific objective of the valuation? Now, basis of valuations are defined differently in different valuation standards. In India, currently, we follow two valuation standards. One is the international valuation standards, which IBBI has mentioned in the valuers rules, and they have also said that any other valuation standards which has been made by authorized bodies. So another valuation standard is by ICAI, the Institute of Chartered Accountants of India, who have made valuation standards, which many people follow. So these valuation standards, they define basis. So overall, in general, I have found three bases of valuation in these standards. First is the fair value, where so these are the sometimes the client would define the basis. He would tell you, please follow this base, or he would only tell you this is the objective, and then it is the responsibility of the valuer to decide on which basis to be followed. So three bases of valuation. First is the fair value, finding the fair value of the asset. Second is the participant specific value. I mean, when the client gives a valuation assignment, so there could be a strategic fit between the client's objective and the subject asset. So, and he could derive some specific benefits from that subject asset. So that would make the valuation different as compared to if the valuation was commissioned by the seller only to general public. So that's a participant specific value. The value would be different. So two scenarios when it is done generally, and the second scenario when it is done for a specific participant, the values would differ, because in the when the valuer looks at the participant specific value, he would look at the activities or the business of the participants. I mean, the person who is interested in procuring or investing. So what is it doing, and how this addition of the subject asset to his portfolio would benefit him. So that opportunity, that benefit would also be considered into valuation. So that's participant specific valuation. And the last and the third and the last is the liquidation value. So liquidation value is when you stop a business, and then the intent is to stop the business, or the scenario is like that, then what would be the value of that asset? Liquidation value can be further divided. So here we will talk about the basic definition. So as I said, valuer has to understand the regulations. Sometimes the client would tell you, please follow this base of valuation. But that base of valuation would not be suitable for the purpose of the assignment. For example, if the client says, please follow liquidation value base for an objective for taxation assessment. So that doesn't go, that doesn't gel, and then the valuer has to advise him, look, the regulations prescribe this, I have to follow the regulations. So this is the right way to go about it, and this is the right base of valuation which I will be following. So that information is to be provided by the valuer to the client, and that's one of his important responsibilities, which you would find in the registered valuers rules. You have gone through the document. So just one point, important point here, the registered valuers rules is a very important document, and all of you must go through that, not only while preparing for this exam, but also while you are practicing. So from time to time, you go through that, and you would find things which are very useful to you in your practice as well. Coming back to the basis of valuation, so basis of valuation, the first basis of valuation is the fair value. The fair value as defined in different documents or different regulations like this. The ICAI standards, the Institute of Chartered Accountants of India standards define fair value as the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the valuation date. Some important words or phrases here. This definition, you would see others are general. So orderly transaction, when we talk about the orderly transaction means there is sufficient time to conduct that transaction, sale or purchase. So there is no hurry. So this orderly transaction time period would also be different for different kinds of asset. For example, if a large plant is there, if a very large mall is there, or a large commercial asset is there, for which longer time periods are normally taken in the routine similar transactions, then the orderly transaction time would be longer. But if there is a small asset, small machinery, or a small residential unit, which could be transacted or which could be negotiated in a smaller period of time, so for the orderly transaction period for that would be smaller in terms of the definition. So that's about the orderly transaction. So people have sufficient time to discuss. They are knowledgeable, and they act at arm's length distance. So that defines the fair value. And also the market participants. Market participants are the people who are indulging into these kind of transactions, these kind of sale, purchase, or commercial transactions which are happening. And the valuation date. Valuation date is very important. So on which date that valuation is to be done. So that's important. This valuation date is, many times people confuse this with the site visit date. So valuation date is not the site visit date. Site visit date is the physical survey that you do. You go and see the asset, the property, the plant. It may be different number of days, because the asset size could be very large, or it could be one single day. So that's the survey date or the inspection date which you call. Valuation date is different and is defined by the purpose or the regulation. For example, in the IBC Act, the Insolvency and Bankruptcy Code, the valuation date is defined as the date of commencement of the corporate insolvency resolution process. Corporate insolvency resolution process starts on, suppose, 1st of January 2020. The law mandates that the registered valuers have to be appointed within 47 days. So there are different scenarios prior to that mentioned, but 47 days is the number of days by when the registered valuers have to be appointed. Now these registered valuers would further, suppose they are appointed on the last day, the 47th day, they would have to gather data, they would have to analyze,
sir,
research.
One doubt, sir.
Yeah.
That 47 days from which date?
From the CIRP commencement, the first day, 1st January 2020. 47th day is the latest by which the valuers have to be appointed. So
in what
there
circumstances?
I'll tell you. So there is a process which says on 1st of January 2020, NCLT would appoint the IRP, and the IRP would conduct the first COC meeting in 3 weeks from the CIRP commencement date. And the first COC meeting would define or decide whether the IRP is retained as a resolution professional RP or there is somebody else who is coming. Okay, so if the COC maintains that as the RP, then he has to appoint from the day he is appointed as the RP. Suppose the COC meeting itself, so within 7 days he has to appoint the registered valuers. But if the
Sir,
COC is
will
not,
you quote the
yeah,
example, please? Will
so
you
this
quote
is an
the
example.
any example?
So this is an example I am giving. So
Okay.
please elaborate, like what kind of example you want.
Yeah, in what circumstances I am not understanding that.
Okay.
47
Circumstances
days.
is, see, I'm not sure whether you are aware about the entire process, though it is not so relevant a thing here when we talk about the registered valuers responsibilities or this report making aspect. But I will explain to you that in IBC, in the CRP process, so first COC meeting should happen in 3 weeks time. So the COC, which is the committee of creditors, the banks or people who have given loans or financial loans to the company, they decide whether this person who was appointed by the NCLT or who was appointed by the creditor remains as a resolution professional for the next 5 months of duration, or he needs to be changed. Okay. So if he remains there, then he has to appoint from that day, within 7 days, he has to appoint registered valuers. And if due to some reasons that decision is not taken in that meeting and 40 days pass 40 days from the CRP commencement, then this person will start working as the resolution professional as per the regulations. And from the 40th day, within 7 days, he has to appoint registered valuers. So that's why I was saying the latest day is 47th day. It should be ideally done within 30 days, so to say. But if it extends, there are some delays in some decisions on part of the COC or some other scenario which comes up, then 47th day, the first person who was appointed by the NCLT, he has to appoint by 47th day registered valuers. So that's the point about appointment of registered valuers. So the whole point I was talking about was in terms of the valuation date. So in IBC, when the valuer get appointed, they will take another, suppose, week's time to get all document information, and then they plan a visit. They go to visit the site. They visit the site, analyze, and from their own appointment, it's about, say, 2 to 3 weeks time, which goes while when they submit the report. Okay. So different dates. First is the CRP commencement date, then the valuer appointment date, then the site visit date, and finally the report submission date. But here in this entire scenario, this regulation, specific regulation mandates that the valuation date has to be the CRP commencement date, the 1st January 2020. Even though the valuer would have visited the site 3 months later, or submitted his reports 4 months later from the CRP commencement date, the valuation date remains the CIRP commencement date, because that's the day when the investors or the COC would make decision in terms of accepting resolution plans or making some changes or whatever decision they want to make. So that reference has to be the insolvency commencement date, the 1st January 2020. So that's the valuation date. Some other scenarios, some people would may decide on valuation date, or some scenarios, some regulations may decide on valuation date differently. So this is how I explain the valuation date aspect. So it's an important piece of information, which if not given, then the valuer should ask the client what has to be the valuation date in this exercise. Okay. Another definition about the fair value is, so the first definition I told you about was from ICAI, the Institute of Chartered Accountants of India, Valuation Standards, 2018. The next definition is from IBBI CRP regulations. So IBBI is Insolvency and Bankruptcy Board of India, which would be your regulator and which is my regulator today, in terms of the as being registered valuers. So CIRP regulations means CIRP stands for Corporate Insolvency Resolution Process Regulations 2016. So these regulations came into 2016. So they define fair value as the estimated realizable value of the assets of the corporate debtor if they were to be exchanged on the insolvency commencement date between a willing buyer and a willing seller in an arm's length transaction after proper marketing and where the parties had acted knowledgeably, prudently, and without compulsion. So this definition is there in the regulations document, and a very important definition and a very exhaustive one. If you see, so many aspects have been covered, legal aspects have been covered, commercial aspects have been covered in this. So when they say estimated realizable value of the assets of the corporate debtor, the first line, second line. So valuation, as you know, is not about, it's not a definitive thing. You cannot value something very definitely. It's only an estimate that you make. So that's why it is called, it's not only a science, it's an art as well. So science in terms of understanding the scientific aspects, doing research and all those parts. And then art is about incorporating the softer issues. I mean, what the valuer understands from the economic scenario, or the asset condition, or the basis of valuation which are adopted. So these analysis, the software analysis would differ from valuer to valuer. So there could be difference in valuation for the same set of assets. So when I say estimated realizable value of the assets of the corporate debtor, so only the assets are being valued as per these regulations. Corporate debtor is the person, the company, or the LLP which has defaulted in payment of their loans or payment of their obligations or the dues. So that's the corporate debtor against whom the corporate insolvency resolution process has been started. So that's the corporate debtor definition. If they were to be exchanged on the insolvency commencement date, so again the valuation date, the insolvency commencement date, so that's the basic piece of information in CIRP regulations. So insolvency commencement date is the valuation date between a willing buyer and a willing seller. So there is no coercion. So both buyer and the seller are willing. So the buyer is willing to shell out some amount of money and the seller is willing to accept that amount of money, and he considers that amount of money as the right value for his assets. So that's the willing buyer and willing seller scenario. In an arm's length distance, arm's length transaction. So arm's length transaction means there is no interest involved. I mean, these people, buyer and the seller, they are not related. So there is no other hidden agenda behind this transaction. This is purely individual, single transaction without any linkages, without any impact on any other relationship of these two entities, buyer and the seller. So they have to be independent people. For example, in certain scenarios, there might be sister concerns, related companies selling assets between each other and buying assets between each other. So that could be a related party transaction. But again, at the same time, it could be at arm's length transaction also. Because if the buyer could have been somebody else, then the seller would have sold the same asset to him also at the same levels of pricing or same level of money. So that's the arm's length transaction. I hope this you have understood this. This is an important aspect. If not, please let me know. I will explain again. The arm's length transaction.
Could you just repeat it again, sir?
Okay. So the arm's length transaction means in literal terms, it's about maintaining the distance. When I talk to you, so there is a arm's length distance between both of us. We are not close to each other. We don't have hidden agenda. So we are talking very independently, and we are dealing very independently and in a very objective manner, straightforward, transparent manner. That the seller would say, this is the price of my asset. The buyer would say, okay, I agree, and he will buy or he will not buy. So arm's length transaction means no hidden agenda. There could be transactions between sister concerns or related companies also. So arm's length, when we talk about, we could get some suspicion that if there are two related companies in the same group, and if they are doing some sale purchase, then there could be something hidden, because it's the same group after all. But practically, there could be an arm's length transaction. There should be an arm's length transaction there also, because within the same group, if the buyer and seller from the same group, and if the buyer is from outside the group also, the seller would sell his asset at a similar price or the same price to him. So there is no partiality, there is no bias which the buyer is showing towards seller or the seller is showing towards buyer. So they are working purely in the interest of the individual companies they represent, the individual groups that they represent. So that's the arm's length transaction. Okay. After proper marketing means the seller has got good resources, or he has good time period available to him to market his product, make it known to people, eligible people far and wide. So it's not that only 1 or 2 or 3 or 5 people are aware that this asset, this wonderful asset, is getting sold, and there could be other 20 buyers who would be looking for such asset, but they are not aware. So that situation should not happen, and that's what proper marketing would do. So a decent, good level of marketing is done to spread the word far and wide that this asset is available for sale. These are the the buyers would come and see the asset, and they could bid for the asset. So that's called the proper marketing, and that will lead to a fair value. If proper marketing is not done, then it is not fair value. If sufficient number of people, or the good number of people from the target market, do not know that some transaction is going to happen, then it will not yield to a fair value. Okay. And
But-
where the part, yeah,
But that part is of the seller's part.
that is the seller's part, correct?
That is seller's part.
Yeah, yeah.
We have nothing to do as a valuer on that part. That to publicize properly that this property is on the hot sale.
Yes. So you don't have, so you assume that the proper marketing will be done
Yeah.
for this. So in your opinion, this will be the fair value. So that's your opinion. Further to that, if he doesn't do proper marketing, or because if he's not doing proper marketing, then in all probability he would be selling the asset at a much lower price. Then it's his loss.
Easy.
Okay, from your side as a valuer, you have given a good estimate to him that this will be the fair value, and if he sells it below that, then it's up to him. It's his choice.
Oh,
Okay.
thank you.
Next point is, and where the parties had acted knowledgeably, prudently, and without compulsion. So the parties involved, they have to be knowledgeable. I mean, they know, they understand what asset is being transacted, what the transaction is going to be, and they are prudent. They know, they very well understand whether it benefits them or it doesn't benefit them, how much it benefits them, what kind of benefits they can accrue by getting this asset or indulging in this transaction. And without compulsion. So there is no compulsion on them to undergo this transaction. So since it benefits them, and they are themselves individually, they have the capability to take decisions, and they are deciding to indulge in this transaction, is what without compulsion means. So that all these factors taken together. So when we talk about fair value, the presence of all these factors has to be there. only then the value would be a fair value. Any aspect missing, then that value cannot be, then that derived value cannot be categorized as a fair value. Okay. Next is the participant specific value, as I explained. So participant specific value would be from the point of view of a specific participant who wants to buy an asset or who wants to indulge in a transaction which would benefit him specifically, strategically. For example, somebody who is currently doing some work, and if he integrates backward, that would add to his value, overall profitability, overall business. And he decides on buying a business which is there in his backward integration or forward integration. So that specific asset, if sold individually, if somebody who doesn't have a choice of integration, if he buys an asset vis-a-vis a person who has a choice of integration, he buys an asset. So those values would differ. So as a valuer, when you do participant specific value, and the client tells you, I have this asset already available with me, and I am planning to buy this backward integrated or forward integration business. So please advise me what value or what should be the value for this business. How much should I bid or how much should I consider? So there the valuer would look at the existing business, how the cohesion of the two businesses would overall help. So that would define the value which the value would give, and there would be a premium if it is giving a benefit. There would be a premium as compared to another individual who would be considering buying that because he doesn't have an opportunity to integrate. So that's the participant specific value. Next premise or the basis of value is the liquidation value. Liquidation, again, the ICAI defines the ICAI standards of valuation define liquidation value as the amount that will be realized on sale of an asset or a group of assets when an actual hypothetical termination of the business is contemplated, assumed. So when a business is expected to be stopped or terminated, then what would be the value of that specific asset? How much?
Excuse me.
Yeah,
Sir, there may be two values.
yeah,
One is fair value, the realizable valuation of a machine. The
right,
other is distressed sale value.
right.
Which shall be this value, fair value?
No, the fair value would be the
Liquidation
first
value.
one. See, distress sale value would be a subset of liquidation value. So again, I will explain to you. So give me a few minutes. I'll come to that part. So liquidation value is the amount that will be realized on sale of an asset. So when somebody or there is a possibility that a business would be terminated or stopped, so what would be the value of the assets or the business? So that's the liquidation value. So this is as per the definition by ICAI. CIRP regulations define liquidation value as the estimated realizable value of the assets of the corporate debtor if the corporate debtor were to be liquidated on the insolvency commencement date. Again, important points, important phrases here is the assets of the corporate debtor. Only the assets are concerned, and the corporate debtor is the person who has defaulted on his dues, on his payments, which he was supposed to do, and against whom the CIRP has been started. If the corporate debtor were to be liquidated on the insolvency commencement date, if this person, this company, this entity, or this LLP was to be liquidated on the insolvency commencement date, liquidated means the business was to be stopped. Okay, the business is to be terminated. Suppose the business is to be terminated, hypothetical situation. Then what would be the value of the assets? So in CIRP, the valuers are asked for two bases of value. One is the fair value. Fair value is suppose the business keeps going. It's a going concern, running business. Okay. Then what would be the value? And the second part is the liquidation value. Liquidation is when it is, premised, or it is supposed that the business would stop on the insolvency commencement date, that very date, then what would be the value of the assets? So that's the liquidation value. Now, liquidation value again could be subdivided into orderly liquidation and distressed liquidation, as one of our friends just mentioned here. So orderly liquidation is, again, you have sufficient time to liquidate those assets. You have time to find good buyers. You have time to tell the market, see, these assets are available for sale. These are the qualities, or these are the aspects of the assets. You come and discuss with me, and then we will take a decision on the sale purchase. Second is the distressed sale, wherein I don't have time. So you don't have time to go for all these marketing and everything. You are in urgent need of money, or there are scenarios that the asset value may deteriorate very fast, or there are certain other scenarios which maybe I'm not able to define right now, but there could be scenarios, possibilities, wherein the seller decides, let's not wait, let's dispose it off, let's sell the assets immediately, right away. So it doesn't wait for marketing to be done, or wait for negotiations, good negotiations to be done with the valuers, prolonged with the buyers, prolonged negotiations, so that he could get a good value. So he simply decides to sell off the assets. So that's the distressed sale value. So there are certain scenarios, situations which this person, the corporate debtor, or the person who is selling the assets, he is undergoing certain situations that he cannot wait for proper marketing to be done, and he decides to sell. So that value would be less than the liquidation value, or the orderly liquidation value. So that's called the distressed sale value. I
Excuse
hope
me?
the difference is clear now. Yeah.
Yeah. What should be the relation? I mean, is there any relation between the fair value and liquidation value? Is it like, can you give some sort of example where we can understand which value will be higher or lower?
Okay. See, logically, in all respects, fair value would be higher. So fair value is the value of an asset which you would realize when the business is running. Okay. So when the business is running, there are so many things. The intangibles are attached. You are known in the market. Okay. The assets which you have installed, you can do minimal level of maintenance for those assets, and still go on for a very long time, getting benefits, commercial benefits, monetary benefits from those assets. Okay. So that's the situation where the fair value is arrived at, or the business is going on. For example, you have a machine which is running right now, though it is nearing its economical life, end of economical life, but still you are confident that you would get good benefits by doing minimal maintenance. Or you have a building wherein by doing little amount of maintenance, you can still use the building for a longer time safely, in a safe structural, with ensuring the safety aspects. So that's the fair value, because you can use it further, and there is no issue at all. But when it comes to liquidation, when you have to sell it, so while installing that machine, you would have made foundations, you would have paid expertise cost, you would have erected electricals for this machine. So when liquidation happens, and when it is distressed, or in not going concern liquidation, when the machine is to be sold piecemeal, then all these ancillary costs, which the sunk costs which have gone into the expertise, the labor, the foundation that you made, goes away. It's all waste. The value is zero. So that's the difference between fair value and liquidation value. Similarly, for a building, when you use the building, you can keep using it for quite some time, or some more time, by doing little amount of maintenance. But when you have to
excuse me, sir.
liquidate it, yeah.
Yeah, one
Sir,
minute,
the
sir.
liquidation value can be all the three. It may be the fair value. If the plant is being sold as full as
Mhm.
it is,
Yeah,
if you can liquidate that as a full plant,
right.
then it has the fair market value. When you are selling the machinery individually, then
Yeah,
it is the realizable value. And when
right.
you are selling it as a scrap or
Mhm.
you can't sell it for less, that is the distress sale value.
Yeah.
All the three have
So,
the
so the difference I'll tell you.
liquidation value.
So
Is it
when you say liquidation value could be fair value also when it is going concern. So I do not agree with that. So fair value would always be the highest of it. Yes, liquidation could happen with a going concern nature as well. But liquidation stage would always come when the fair value stage has passed. So when is fair value stage is always a superior stage wherein you can realize better value for your asset. Liquidation is stage, for example, in CIRP, if I compare. So the first 6 months are for getting a resolution plan, the timeline which are defined. It could be longer also, but as defined, the basic minimum timeline is 6 months. So the company is given 6 months, the corporate debtor is given 6 months to get a resolution plan, get it approved by the honorable NCLT. So that's the fair value. So the fair value play is there. So the valuation, I mean the process could expect a value higher than liquidation value, maybe fair value, or a little lower than, or between fair value and liquidation value, but definitely higher than liquidation value. In certain scenarios, some case laws say the committee of creditor has a commercial wisdom, so they can decide on selling it below liquidation value also. But those are special circumstances. In general, we should take that the fair value is the most superior situation where we get a good value. Then comes the liquidation value with going concern. Then the liquidation value and sale value. Even for liquidation, which is not going concern, you have close to 9 months to sell in IBBI CIRP scenarios. So 9 months is a good enough time for doing marketing and getting good purchasers. So that's the liquidation part. I hope you have understood these different aspects.
Sir, any
But
value depends on depreciation, is it?
yes, so depreciation is an important aspect in valuation.
Sometimes the product or house, the lifetime after expiration, so
Yeah.
it has to be converted into scrap only.
See, not exactly scrap. So, as a valuer, when you go and see the house or the machinery, and you see the owner or the operators or the operations people, they have maintained it, the asset in an excellent position by providing timely maintenance or taking care of the machine. Then you can give an extra life also. I mean, you can say that, in my opinion, there is still some life left in this, and 3 years, 4 years more, this machine can run. So not always scrap is, it's not, that's not true that as soon as the defined economic life is over, then it is scrap. That's
But
not true.
but business house has already stopped. Then only it has gone for liquidated value. Already stopped. Then what he will do? All these machineries, all these buildings.
Yeah, see, if the business is stopped, then if there is no possibility of revival, business is stopped, but still the building and the machinery are kept in a good condition, not running. Maybe commercially they are not running it, but they are careful enough to keep those machineries or the building in a good condition. Then there is a possibility that the business can be revived. So, with the current management or current owner, there could be certain scenarios that he was not able to get working capital. Suppose he doesn't have that financial muscle power, or those good relations with the lenders, or some other properties to to be shown as guarantees, so he was not able to get money or the working capital, so he had to stop. But there could be people who could understand the value of this business. I mean, these are excellent machines, these are excellent buildings. So let's buy these, and there is a good synergy between our existing portfolio and these assets. So those business can definitely be revived. So it's not always liquidation. So first preference everywhere in CIRP also, the soul of the act and the regulations is that the assets of the corporate debtors have to be maximized. So that's the first objective of the resolution professional. So how he maximizes that? He maximizes that by keeping it as a going concern, or by bringing in newer investors who would value that entity as a going concern entity. Liquidation is the last resort. I mean, if nothing works, so even after the 6 months of CIRP is over, so 3 months are given to be sold as a going concern under liquidation. So that's as good as fair value sale.
Just one example,
Yeah.
if like you see recently, we are having lots and lots of power plants which are
Yeah.
fixed in nature.
Right.
Huh?
Yeah.
And suppose we are going for a valuation of those power plants,
Right.
then what will be the due to PPA or coal or something, those
Yes.
power plants are not in running condition, but they are very recently they are erected or commissioned. So in
Yes.
that case, the liquidation value, and what will be the difference in fair value and liquidation value? Because we are knowing that the machine conditions are good enough, and it
See,
can
machine
run. For 25 years.
machine condition is good again, but you yourself made that point. The PPA and the FPA, these are important aspects in power plant operations. If they do not exist, then it impacts a lot the value of those machineries also, because the buyer or the market could think, suppose a very hypothetical case, that these locations, these plants would never be able to get PPA to enter into a PPA or an FPA. What then? So this power plant is not operationally viable. Then the machines have
A
to be
running organization,
sold,
sir,
liquidate. Yeah.
a running organization may also go in liquidation, sir.
Yes, a running organization may also go into liquidation. So CIRP is about that only. So there are many organizations which are running, but they are running in losses, or they are not running efficiently. So CIRP starts against them, and the effort is to bring another management who would run this plant or this entity in a profitable manner, in an efficient manner. If that fails, then it goes for liquidation. So there are many companies which are running and still go into liquidation. There are many companies which were running, entered into CIRP and then went for liquidation. I do not recall any company which was started, which was not running earlier, but which was started after CIRP commenced. But there have been instances where the company was running earlier under losses or not efficiently, but when the CIRP started, it could I mean, display a better efficiency in terms of output. Can we move to the next point? We have only about 20 minutes left.
Yes,
Sir,
sir.
one
Yes, sir.
doubt, sir. One doubt, sir.
Yeah.
You said that when CRP commences means who will decide that CRP enters?
See, there are different. So again, the act. When I say the act, that means the IBC 2016, the Insolvency and Bankruptcy Code. So there are provisions. A supplier of goods and services who is called an operational creditor, he can file an application, provided his dues are more than 1 crore. Then there are banks or financial institutions who have given their who have given loans to this company. They can file an application. There are employees whose salaries have not been given, or a group of employees, so they can file an application. So all these entities. So anybody who owns, or to whom this company owes some dues and have defaulted, after certain time period by giving certain notices, and if the defined situations are existing, then they can file an application to NCLT, National Company Law Tribunal.
Thank you, sir. Thank you very much.
Welcome. So let's go to the next point about the different definitions and the purposes of valuation. So versus basis of valuation. So different purposes when the client would tell you or you would understand from the regulations. So what values are used? For example, sale. Sale is an exit transaction. So somebody wants to sell. So fair value is the basis. Somebody wants to purchase an asset. So it's an entry transaction. And when the valuer is commissioned by the purchaser, and they are taking into account the strategic considerations like the integration with different businesses. So again, fair value could be considered, or participant specific value would be considered, as I explained earlier. Mortgage is there when the banks or the financial institutions are lending money. So in that scenario, they would like to know from the valuer what would be the liquidation value. In a hypothetical situation, if everything goes wrong and this asset for which we are providing loan is to be sold, then as a bank or as a financial institution, what would I get in that unlikely worst scenario? So there the valuer provides them with the liquidation value. So this is the value you would get in that scenario. Taxation is the assessment when the tax authorities or the other authorities who would impose taxes or fees, etc. So they would like to know what is the fair value of this business or this entity. So the taxes are always on the higher value or the benefit which the individual would get, the best benefit the individual could get, and then that is derived from the fair value only. So that's the taxation part. When the objective is taxation assessment, then the fair value is to be provided. Insurance could be different scenarios. Replacement with new. Suppose a plant is there, it is running all right, 5 years have gone, 15 years is the life, and after 5 years there is a fire, the entire thing is burnt. So that's the replacement with new policy, where the asset, the actual machinery, as well as whatever the ancillary costs or the supporting costs, expertise, the foundation, if the plant is to be, if the machinery is to be relocated, or the labor which went into it, or the electricity, electric connections, the electric setup which was installed to run this machine. So all that is to be done new. So that's a specific policy which is called replacement with new. Then there is a policy for actual cash value. Actual cash value, replacement cost for new, and then you deduct depreciation from that. For example, for vehicles, so there are policies wherein if a vehicle which has undergone accident and which had already covered its 50% of life, so the insurance company would not give the entire amount, total amount to buy a new vehicle. They would reduce the depreciation value and then provide the balance amount. So that's the actual cash value. Indemnity value is indemnity is about putting the client in the same or the subject in the same financial position as immediately before the loss occurred. So for example, the celebrities do indemnity valuation, I mean indemnity insurance for themselves. So there the valuer would be required to find out what is the valuation, or some other asset, some machinery which is giving good returns. So their indemnity valuation could also be sought by the insurance companies. So these are different objectives for which valuation is undertaken, and the basis of valuation, I mean on what you can find out the right value which is to be determined in such situations. Now coming to the contents of a valuation report. So we discuss about the valuation basis, objectives, and the basic nature of the report when he talked about the style, the structure, and all those things. Now what should be the report consisting of? different aspects. I mean, what you have learned about the asset. So all those things, what was your appointment letter saying, so all those conditions. So they will all be made a part of this report. So the registered valuers and valuation rules 2017, as I mentioned, is an important document. Please go through the document. So there, these contents are given. So these are basic minimum content. I mean, the mandatory contents. To make your report better, you can always put other qualitative aspects or highlight on these given aspects in a detailed manner to make it a good informative report. The first point is about the background information of the asset being valued. So here I'm talking about the valuation report. So the assumption is that all the process has been completed. So you have got the appointment letter, you have visited the site, you have got your information documents, and you have done the research analysis, everything is done, and now the report is to be made. So important points is about the asset which is being valued. So you need to write about the asset. If there is a plant and machinery, then you need to explain the process involved or the machinery, the condition of the machinery, what the business is doing, how long it has been there, and what is the information about the surrounding area. Similarly, for land and building, what business the promoter company or the promoters are in, how this building is being utilized, and what is the nearby area, what was the premise assumption when the building was erected or the business was erected. So those things. Then purpose of valuation and appointing authority. Purpose we just discussed. The purpose, whether it is for insurance, whether it is for taxation, whether it is for CIRP or some other purpose. So that needs to be identified. And who is the appointing authority? Appointing authority is your client. Who gives you the appointment letter? So that's the appointing authority, and you are answerable to the appointing authority. Your valuation report is a very sensitive, confidential document. It must be given to the appointing authority only and none else. That's a legal requirement because the nature of information is like that. For example, in CIRP, the IBBI CIRP regulations, it requires the appointing authority is the resolution professional or the interim resolution professional or the liquidator. And the report, it is not mentioned, but we must understand the report must be given to the appointing authority only. In CIRP, the decision maker in important decision makers is the COC, the Committee of Creditors. But we are not supposed to give a report to the Committee of Creditors. We have to give it to the resolution professional only, who is the appointing authority. It is the responsibility of the resolution professional to share the information with COC at his own level. So there is a separate process advised for that, which he has to follow. So he also cannot freely share this report with anybody else. He has to take certain undertakings. But that apart, that's his job to do. Our job is to share the report only with the appointing authority when it is completed. Identity of the valuer and any other experts involved in the valuation. If you have done the valuation yourself, then you make the report accordingly. You mention that you did all these activities. But in case you have hired any expert, so there are scenarios where the valuer could hire. So there is a provision. So you could hire expert for understanding or analyzing certain finer aspects of the business machinery or the building, which you are yourself is not technically capable. But what you have to do, you have to include the details of the expert and also the report given by the expert in your own report when you submit it to the appointing authority. So that disclosure you have to do. Then is the disclosure of value or interest conflict. So you have to disclose that if there is any conflict, I mean, if your working is completely independent, then you say so. But if it is linked or if it is related anyhow, and there is a possibility that your conclusion or your estimates could have been affected by that relationship or that knowledge, then you have to disclose that. You have to disclose that first to the appointing authority when you are taking the appointment letter, and then you have to disclose that in your report also. Yes, sir.
Is there any such panel of experts so that we
There
can
is no
hire?
such panel, so you develop your own panel of experts. So when you start working, you get to know different people. So like you would have a good expertise in valuing large commercial buildings, or suppose sugar mills. Then there would be another person who would be very adept at doing valuation for power plant, or some other large land and building projects. So that ways you do networking, and you search for an expert if you require. And I'm
Yeah,
sure it's not difficult to find experts. You can find experts.
can he be an independent or working in any other organization like government or semi-government or central government?
See, as far as the valuer is concerned, he has to be an independent person, not employed anywhere.
No, expert.
Expert, there is no specification. I mean, there is nothing specified. But if he is employed somewhere, I think you can do that in your disclosure that he was employed there. And I think the expert himself would not accept this assignment from you if his organization do not agree. So there are certain organizations who do agree that people can work independently also. I mean, freelance for their own interest. So that's
Expert
okay.
is any experience is required to hire?
That's right. Yeah. So expert is by definition means that only. So he has some experience. Otherwise, how do you justify hiring him
Yeah,
as a
minimum.
valuer? No, there is no minimum expertise.
Okay, thank you.
Yeah. So Mark Zuckerberg is an expert. So whatever Facebook you want to talk to, he's a young guy. So you can consult him. No issues at all. But you have to disclose in your report. So there is no age, experience. I mean, there is nothing like that prescribed what should be the experience for an expert. But he should be an expert in his own field, and you should be able to justify when questioned, why do you employed him? So then you should be able to justify he was engaged because he's an expert for these many reasons. Okay. Then I explained about the date of appointment is the date when you get the appointment letter. Valuation date is the date which is required by the regulations. So you have to mention there that in CIRP, valuation date is the CIRP commencement date, or if the objective is something else, and if the regulations define the valuation date there, then that is to be taken like that. Else, whatever is advised by the appointing authority, you take the evaluation date. And the date of report. So one thing is missing here, date of physical verification. So for us, plant and machinery and land and building registered valuers, we have to visit the sites physically to understand ourselves what is the condition of the asset. So that one thing is missing here. I think one should include that also in his valuation report. Then sources of information to make. Yeah. Yes, sir.
Sorry, earlier you said just the date of commencement and date of report shall be the same.
No, sir. Date of commencement of the process, the CIRP, is the process when the CIRP happened, and the valuer could be appointed much later, and naturally the date of report would be slightly later than when the valuer was appointed. So date of commencement in CIRP is the date of valuation, when the valuation is done.
Okay.
Okay, so assumptions, those formulas, those parameters that you apply, depreciation and all those things. So the reference is valuation date, which is the commencement date in CIRP.
That means valuer cannot assess at the prevailing, time.
No. So that's the requirement. So that's the act, the law requires you to value on the valuation date. So we have to follow the law.
Right.
Now the sources of information. So whatever information you derived from, you hired an expert, please mention that. You simply took information from an expert as a written opinion, please include that. That is your source of information. You refer to the documents provided by the appointing authority, the information provided by the appointing authority, the people who you met at the site, those provided some information and documentation, provided those people who are authorized by the appointing authority. You should not be, considering information given by anybody. Anybody means you should consider only the information and documentation provided by people who are either the appointing authority or have been authorized by the appointing authority. And mind it, please have all these things in writing, in email or hard copy letter, properly signed by the appointing authority. So don't go by verbal assumptions or discussions or assurances. So whatever is there, so there might be telephonic discussions which would happen, but please document those telephonic discussion. As soon as you end the telephonic discussion, write a mail back to the appointing authority that this was discussed, and I will be taking these assumptions or this information in my report. So your job is done. So as far as your expectation of being independent and being diligent is there, so you have to ensure that that diligence is shown in each and every step. So later on, when some verbal discussion happened, and you put a lot of efforts and time, and you prepared a report based on those assumptions or those discussions, and all of a sudden the appointing authority or someone else would say, where did you get this information from? We never shared this information. Then that goes waste. So be very careful. So it's not that we have to be suspicious of everything, but we have to be very careful about safeguarding our own selves, and also the requirements of law and regulations. Those are the foremost things. So never default on those things. If in doubt, please ask people who are knowledgeable or your colleagues, what does this mean? So never go against the law. So the law or the regulator, this is my own experience. So they might forgive, or they might forgive a one-time mistake. But I think if it is fraudulent or with some hidden agenda, then the repercussions could be very heavy. So let's be very honest, straightforward, and diligent in our approach. And you would find the regulator law in support of you. So nothing to worry about. Just be very careful and diligent in whatever you do. Next,
Sir,
yeah,
sorry. So
yeah.
just one question. Something like a site visit, date of site visit, and we take
Yeah.
the GPS camera, take the photos. Can
Right.
such work be delegated to our own employee as a registered valuer, or the registered valuer has to be present there?
See, it's good to go yourself, but if you are sending your employee for the registered valuer employee, then you have to ensure that that diligence or that deepness was there. So what you can do, you can ask your employee to get a video conferencing done with you. If you are indisposed or there is some other reason that you yourself cannot go, then you please make your employee who's going there have a video conference, and please ensure that the person who is going there is well qualified and is doing the job as prescribed by you or as told by you.
Okay, sir. Good enough.
Yeah. Then the procedures adopted in carrying out the evaluation. So what you did, whatever your assumptions were, and what process you segregated the machinery or the shed into different components, different parts, for ease of valuation, or due to some other aspects which you found at the site. So please do mention those things. What was the procedure adopted by you? Then valuation methodology is there. Valuation methodology, the approach and methodology. I am not sure whether you have learned that, the cost approach, all these approaches and methodology. Either you would have learned already in these classes, or you would be having a class subsequently. So that needs to be mentioned here. Then major factors that influence the valuation. What influence the valuation? The economic factor could be there, or you found that the life is already over, but the condition of the machinery is so great that you are of the opinion that it can run more. So all those are factors which should be included in the valuation report. Then the conclusion is there, so you give the value as has been asked for from you in the appointment letter. So that's the conclusion. Caveats, limitations, and disclaimers. So these are extremely important things. So you must have a separate section for these things. Disclaimers, for example, if you found some restriction or some difficulty in doing some aspect of the valuation exercise, then you please mention that. For example, if a shed or a transformer, if the company is not running, is covered with heavy vegetation growth, and you suspect there could be snakes or there could be wild animals which are restricting your access, or the nameplate is not visible, or the entire asset is not visible. So whatever difficulty you faced and the assumptions you made as a result of those difficulties, please do include in your limitations part and disclaimer parts. So these are important aspects which you need to, yeah.
One thing is, I think there should also one thing.
Yeah.
That is the remaining life of the machinery.
Yeah.
Yeah, property.
Yes.
Is that not important under IBBI?
Remaining life is important when you talk about the valuation. So valuation under IBBI, valuation is the most important aspect of the entire process, because based on the valuation conclusions, would the decision be made, who buys, who comes, and at what price. So this is the most important part. And the life of machinery or the life of building, so they are an integral part of your conclusion as far as valuation is concerned. So yes, these are important aspect in indirectly. So the law or the regulations do not talk about the life of machinery, so they don't go into details. So they expect the valuation report or the valuation exercise to consider all these aspects, that the valuer is diligent, honest, straightforward in his approach. So that's the basic assumption, expectation.
Can I ask?
Sometimes,
Yes,
sometimes
please.
they want that the remaining life should be given in the report.
Remaining life, yes, you can mention. So it's your prerogative. I mean, what information you want to give in the report is your prerogative. As I said, these are the basic minimum mandatory things which should be there.
Right.
Okay, these give you a basic safeguard or represent your diligence. But if you think there are many more things, you can make your report more user friendly, then it's all up to you. So you are free to do that.
Can I ask one question?
Yes, please.
Yeah, if you have any sample report, I mean to dummy report also, or any report which you have done or somewhere you have presented, maybe confidential, but it may be like a sample tag. So can you share like that?
You rightly said reports are confidential, but the formats. So this is the format which I just presented to you.
No, I understand.
So,
I'm not.
Don't worry. This is what
if you have.
No, I have made multiple reports, so I have a large number of reports. So, and I have developed my own style, as I said. So there is a style. So I have developed my own style. So there is a report format. Okay, let me check if I can make a blank format and then share with you. So let me check. I'm not giving 100% assurance, but let me check, and if possible, I'll share that with you. I'll share with the ICMI. Maybe they can share it further with you.
Because let me not be cross-talk. It is not lacking in professionalism. I am just.
Please come again, sir. I can hear you.
I'm talking. It should not be cross-talk. So one question first is that any format or any dummy report, please share with me. It will be great help for all of us. Then another thing I would like to ask. I was just listening to your all entire. It's excellent. No doubt about that.
Yeah.
Thank you for your excellent presentation.
Most welcome. Yeah.
I have one question that in case of plant and machinery, nowadays
Yeah.
there is a license, in case of any petrochemical plant or even in
Right.
case of power plant,
Yes. Yes.
let's say the turbine is from the GE.
Right.
How, as a independent valuer, how
Right.
have you ever encountered any problem from the licensor? Because licensor having own design life, and if a turbine is costing 6 CR in Indian rupees
Yes.
at a particular date or time, and he gives some bare minimum time or depreciation or the life of that turbine, maybe 15 years, 20 years.
Yeah.
Because of liquidation or because of the non-paying of any debt, any company gone red, and company that all the creditors come for the liquidation.
Yeah.
This case, I'm telling about the case study. Have you encountered any?
Yes, yes, sir. So I'll tell you. So what you are referring to is if the warranty considerations are missing. So there are multiple cases where the machinery supplying company vanished.
Yes.
So there are no after sales support possible. So in such scenarios, what you do, you find out from the market whether there are other maintenance providers could provide. If the machinery is a very specific special purpose machine, then you put some discount on the value. As a valuer, you put some discount that since this is a special purpose machine and the maintenance provider or the service provider is no more there, and the buyer would definitely take into consideration these things, that he won't be getting after sales service, so he would not be putting that much value. So your fair value is discounted a little. So that percentage factor, discount factor, you will have to decide based on the situation, based on the machine and the economic scenario.
So I have another related question. Just more than 2 minutes. If you have given, say, for example, of Siemens or Solar Turbine or some brand name, and there are many proprietary clause, international clause. They can go to the International Court of Justice. So, for example, they practicing as a independent valuer. Say if you are getting a 10 lakhs as a fee, and then as a valuer, is there any indemnification worldwide? Nobody can sue you in any court. Say you have given a value and signed and stamped, and you get. Sir,
there is no. Let me tell you, there is no indemnification, but you have to take. There are policies available, insurance policies, indemnity policy, indemnification policies available. So you can buy those. You have to pay premium. So to safeguard that you would do, but that would be an additional cost to you.
Means as a professional, there is no such indemnification available in India.
For professionals, there are even for IPs, insolvency professionals, there are indemnity available, so you can buy those. Yeah.
Okay. Means for getting a 10 lakhs, you should not be in a risk of 100 crores or 200 crores international lawsuit filed against you, because you.
It all depends on the law, So recently there were a lot of hullabaloo over banks asking for indemnity clauses, indemnity agreements when they empanel valuers. So people went to High Court also. So High Court, Mumbai, so there was a writ petition. They said that there is nothing wrong. This is the summary which my own interpretation may not be true. So, but I think what the High Court said, they said there is nothing wrong in IBPI asking for indemnity clause.
Yeah, because
so basically it's up to the individual. If you don't want to sign, don't sign. Don't take that assignment. So what's wrong? So he, as an independent market player, SBI or any other bank or any other financial institutions, so they would like to safeguard themselves.
No, sir. I have not been able to communicate you.
Okay.
If you are practicing as an independent.
No, I understood, sir. So what you said, if you are practicing as a valuer, and if your conclusion is challenged somewhere, exactly. Do you have the risk? Yes, you have the risk, because you are responsible for your report, you are responsible for your conclusions. So what you can do, you can go for these policies, insurance policies, which are available for professionals. So there are policies in the market.
Okay.
Yeah.
Okay. Thank you very much.
Okay, thank you. Yeah.
Once it's up, once selling and buying is completed,
Yeah.
even after that also this valuer's report will be confidential, or that can be that we can.
See, once you have given your report to the appointing authority, so what he does, he or she does with that report is all his, judgment. But as far as you are concerned, this report remains a confidential aspect always.
But I am asking on different, actually.
Unless it is required by the law. So when the law requires you to present or come and appear, then you have to do that. So you can't say it is confidential between me and the appointing authority. If law requires, you have to disclose. Yeah, please. Does that answer your question, sir?
So this, when we fix the base as participants specific value,
Pardon?
we create the participant specific value.
Yeah.
So in that, is there any conflict arises on the professional fairness, like ethics, and because we are going with the participants' interest and advantages, right?
Okay.
So is there any problem in the fairness in the professional ethics? Because we are going.
In terms of ethics?
Yeah.
Okay, I don't think. See, as a valuer, when you have been commissioned by the purchaser, the participant specific valuation. So, as a valuer, if you the ethics question comes when you would be valuing it too low or too high just to benefit your assigning authority or employing authority. But I think that doesn't work. So the whole idea of appointing you as a valuer is to conclude that transaction. So your employing authority would be interested in concluding that transaction. And if you give any valuation just to benefit him or with some other aspect in mind, I don't think that transaction would happen for him. So he's a smart guy. You can't give a very high value. And if you give a very low value, he will not be able to buy. If you give a very high value, I think he's a smart guy. He will not be selling out that much. So it's only your credibility which comes into picture that time. So I think there is no ethics question there, but the business aspect, the future business aspect, as far as this specific client or the word of mouth, as I said, would be impacting your career.
Thanks.
So
Sir,
let me complete, there are 3-4 points. So let me complete these 3-4 points. And then we'll have 1 or 2 more questions. So other important requirements are that you have to maintain the proper working papers for 3 years or such longer period as required in its contract for a specific valuation. So this is the requirement as given in the registered valuer rules. So when they say 3 years, so 3 years is minimum for any assignment. But for assignments like CIRP, so again, this is not specified, but this is my own interpretation. This period could be as long as 8 years. Because 8 years is the time wherein the IRP or the RP is required to maintain all information. So it flows down to the valuer also. So you have to maintain all your documentation information for that long period. But as far as the rules are concerned, registered valuer rules, they talk about 3 years or such longer period. So this could be one question in your exam. So that's why I'm touching on this. In case of litigation and valuations, the requirements imposed by the local authority where the property is located are important. So for land and building people, know the local regulations, the rules where the property is located, where the building or the land is located. So that's important. So when you do your valuations, so the local aspects, similarly for plant and machinery guys, the local aspects of plant and machinery, I mean the pollution rules of the local state government, which could differ from one state to another, but the local state government rules, the authority rules would be applicable. When the valuer has engaged an expert service, the expert's report should be made a part of the valuation report. This we discussed earlier. the report should be able to withstand the test of cross-examination in a court of law. So all the mandatory aspects which are mentioned in the registered valuers rules, so those are the minimum ones. Those help you in case it goes to court, then at least those parameters you would have complied. And if you are giving more information to make it more exhaustive, would further safeguard you when you show your transparency in the report, how you have approached, how you have derived, and all those things. So this is very important. And as I said, report is confidential between you and the appointing authority, but law is supreme. So whenever they can ask you anything about the report, so you can't say no. So in such cases, you have to disclose or you have to share information with the law authorities accordingly based on the situation. This is a small paragraph on the registered valuers. This is from the Companies Act. So just go through this before you appear for the exam. This is section 247. Just remember section 247 of registered valuers, chapter 17 in the Companies Act 2013. So this talks about registered valuers responsibilities in brief, which are further elaborated by the registered valuers rules 2017. So that completes my presentation. If we have questions, maybe 2-3 questions we can take, because I think you will have next session also wherein you have to join. So Sandeep ji, are you there? Can I take one or more questions?
Yes,
one or
sir.
two questions?
Yes, sir.
Yeah.
Sure, sir.
Thank you, sir.
Yes, sir. Yeah.
You said maximum period of 8 years. So even after that, can we dispose after 8 years those papers? Need not to be stored.
Yes, I think for the other aspects also, the Companies Act also requires 8 years for companies to maintain the documentation. But these are the digital times. I mean, so what I do personally, I'll tell you, for documentation, I try to maintain the document at one place, and then I also keep a backup in my digital hard drive. So it will remain with me forever. I mean, not only
backup, okay, sir, but physical document.
Yeah. I think 8 years after that you can dispose it.
Can it
but
be challenged?
If there is another law or regulation under which you have made this report and it requires a longer preservation, then you have to do that.
Okay, can it be challenged before 8 years or after 8 years?
Before 8 years, yes, it can be challenged.
Okay, thank you.
After 8 years, I think then those limitations, etc., would come into picture. Then you can argue that you have already disposed the documents, or you no more have the information available with you. But I think it's a long period. So and by then you would have many more advanced technologies to preserve, secure. So you don't even need to. I think by 8 years you would not be even using hard copy papers. So that's an assumption only. Yes, but requirement is that you have to preserve. Yes, sir.
You'll be sending some MCQ, I think, on this
MCQ. I think you already have the sample papers, and there are only 3 questions coming from this section. So MCQs, yes, I will share with ICMAI, and they can further share it with you. But these are general questions, so don't worry about the MCQs from this part. So again, as I share in my other classes also, so the best way to attempt these kind of exams where you have a negative marking is, in the first round you attempt those questions which you are 100% sure of that you won't go wrong, and in the second round you take up questions, and where you are completely clueless, don't ever touch, and where you can make some smart guesses, you attempt those. Negative marking is a very important aspect. So people are not clearing exams with marks like 59, 59 and a half even. So be very careful.
Yeah, finally, sir, my request. If you share, if you want to share any dummy report, I request to share a land and building also. Thank you.
I won't be having land building, so my specialty is plant and machinery. So maybe I will request ICMA if they have a land building report, so they can a format, then they can share it with you. I'm not sure. Plant and machinery also I have discussed the mandatory parts. So as I said, if available, I will definitely share with you, but don't worry about the report structure right now. You understand first what is required, and then you can develop your own style and own reports. So when you start practicing, don't worry, you just call me and we will discuss. I'll tell you how the report is to be made when you start practicing.
Thank you very much, sir.
Okay.
So can
Can we
you
get
touch
your
upon
contact?
a little?
Pardon?
Can you touch upon a little on KVS?
On
The last
come
point.
again, sir?
On the KVS last point.
Last point.
No, in the display that you have shown, the report.
Okay,
part.
caveats.
Yeah.
Okay, caveats are, this is basically a legal term. I mean, caveats means what as a valuer you want the reader to be careful about. So those are called caveats. So something similar to disclaimers
Okay.
or limitations that you come across.
This has got nothing to do with the legal caveat, right? People go to the
Legal,
court and file caveat to protect themselves, something like that.
no, caveats, yes, see here, when I talk about the limitations and disclaimers, so those are caveats only. So you are expressing yourself that you could not do this aspect of valuation because of this limitation.
Okay.
So nobody can question you for that. I mean, because that situation actually existed there.
Yeah.
And if the appointing authority has any issue, then he can discuss with you how to remove that limitation or how to remove that difficulty which you faced. So that's what I said. So whatever you discuss, so keep these things in writing, in emails. So when you face this difficulty, so when you talk to the appointing authority, you tell them that there should be a secure site access, for example. You know,
Okay.
when you go to do an assignment, it is your desire and your responsibility to keep you and your team also safe and sound. So you should not be entering a shed which is completely dilapidated and things are falling from overhead. So that's very risky. So you can mention that you could not enter the shed. In case you could not notice something important due to this aspect, please mention that. So all these are, I mean, limitations, disclaimers, caveats.
Yep. Thank you.
Yeah.
So one more question, sir.
Yeah.
Sir, suppose we are writing some valuation report, okay? So
Yes, sir.
I need to acknowledge whatever the documents he has supplied.
Yes, yes,
And,
you should.
my doubt is,
Yeah.
some litigations which are kept hidden,
Okay.
that are not been supplied. So
Okay.
I think we must acknowledge what are the documents he has given us.
Yes, you must acknowledge, and then there are I mean, in disclaimers you write that you are provided this information, and if there is no legal information, for example, provided to you about the ownership of the land or the ownership of the building or some other legal aspect, some legal case which is going on the plant and machinery, then so there are standard lines which say if there is any legal implication of this which could affect the valuation conclusion, then I'm not responsible for that because that information has not been provided to me. So these are the disclaimers.
Very nice, sir. Very nice. Thank you.
Yeah. Okay. So let's conclude here. Thank you very much for your precious time. And thank you, ICMI.